What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the one and only SPY, the Nasdaq, the QQQ, and the indices. Break down what's going on with Tesla right now and many other stocks, and talk about why we actually have some more upside potential to come very, very soon. But before I break anything down about this, though, before I get into any more details and talk about why that is, what calls I'm holding right now, what's going on with the markets, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 of free stocks, each worth up to $3,000. And the best part is any could be a free Tesla share. The offer ends in just 8 hours from now at the time I'm recording this and uploading it. 8 hours are left. Make sure you check it out before they run out. This is your last chance to get up to 12 free stocks from this specific offer. Once again, check it out before they run out. With that out of the way, let's get on with the video. So SPY is up 0.36% for the day, holding up quite nicely. We did actually have a bit of a pullback today, retesting this major support around this 411 area. And then we did actually get a nice bounce off of it for a very bullish looking close. But the real question is, will we continue pushing, or are we going to see a bit of a pullback? I will actually break this down in a couple of minutes. But first, let's talk about some earnings. So far, the market is liking what we are seeing. So far, we're seeing, once again, pretty decent earnings compared to expectations. Charles Schwab had earnings, and they actually beat expectations once again. And when you actually look at the data specifically, we had about a 93 cents per share profit for their EPS compared to the 90-cent being the estimation. So they beat on EPS. Revenue was almost exactly what was expected at 5.12 billion. Charles Schwab had pretty decent guidance, not too horrible. And that, once again, they're actually doing so fairly well right now compared to expectations. Now, what's good about Charles Schwab is they're helping to fuel the narrative that Janet Yellen was setting about the fact that the banks are doing well. We don't have to worry too much and just things like that. So once again, the market liked it. That's part of why the market's holding up. Lastly, I want to just mention the facts that we have some building data coming out for tomorrow, and we also have a Fed speaker at about 1 o'clock p.m. Eastern time. Make sure you're ready for that. And with that out of the way, I just want to talk about the charts, what's actually going on so far. Well, when we look at SPY, we have a next level of resistance around this 414 area. We're actually trying to test it right now. Now, there is some downwards pressure that is still hurting the markets because of the fact that the dollar is breaking out and the VIX is very undervalued. But so far, the market is very resilient and we close just below resistance. Now, because we pumped so much or like quite a bit during the last hour to hour and a half, there's a good chance we might actually open a little lower, maybe gap down, maybe slow down just a little, and then we just continue to go. And if we break this 414 area, we're going to retest 415 and 416 pretty quickly. But overall, looks more bullish than bearish. There's no true confirmation of this trend reversing. But what about the bull trap I was talking about yesterday? Well, remember what I said yesterday. I did not say the market's going to crash. I told you all we have a very, very big bull trap developing, in my opinion. It's just that it's going to take a while for us to actually see the reversal. But when you look at the RSI and the MACD, we still have this bearish divergence developing. Look at the RSI and where the MACD were right about at these levels from this 411 area when SPY was there in the very beginning of April. SPY has been uptrending since, but these things have been downtrending. If you look at the PPO, we also look at the levels the RSI is at. And as long as the divergence remains, as this thing continues to pump, it's going to most likely reverse pretty quickly. When may it reverse? Well, if it doesn't happen like for the super short term, there is a chance it could actually happen as we get closer to the month of May or during the month of May, once we get very close to more earnings and maybe for other factors. I'm not really anticipating that Apple's going to have the strongest earnings, so maybe big tech could play a big role. There's also the inflationary data coming out because not UChicago, it was actually the University of Michigan. Sorry about that, guys. They're actually anticipating higher than expected inflation, so that can also affect how this rally continues. The smart money are actually selling the rally. If you look at the HYG, they're not trusting this price action. They're starting to sell quite a bit. And not just the HYG, but other factors and other indicators are telling us that. If you look at like smart money versus dumb money, I don't really like to use those terms, but that's just what the indicator is known as. That's also telling us that smart money are removing billions and billions of dollars. They're selling and selling and selling. The people that are buying like crazy right now are retail. Okay, so make sure you are well aware of that. I will go into more details about the charts later on in another video, but for now, the charts are holding up. So what I think is going to happen to SPY, the bullish case is a breakup of 414 to get to 416. The bearish case is going to be a breakdown to 411, break below that, and we could see 408. In my opinion, the odds are so far favoring a more bullish structure that is developing. We're trending well above the hourly 50 EMA so far. The EMAs are still like kind of widening in a way, and we're holding up nicely. It looks to me like it's going to pull back in the morning, then just try to bounce and try to push up even more and just continue going. There's no true sign of weakness, even though volume is declining a bit. There's no true sign of reversal. The market's holding up nicely. Additionally, I just want to note that Coinbase is actually something I'm holding calls in. This is a pretty nice play. I'm not really advising you to buy into this in any way, shape, or form, but I do want to note that I actually did buy calls down here. I loaded the boat around the 65 area because I saw a bullish divergence around the very shorter time frames. It actually held above the 200 EMA on the 4-hour time frame, and it just kept going from there. Now it's testing this gap resistance. It actually closed above it. Looks to me like either the market's going to keep going and help this thing pump, or it's just going to try pumping on its own and go solo. Either way, it most likely is going to try to fill this gap soon, get all the way up to 70. That's just my play of the day. And I do believe it's very likely it's going to happen this week, if not as soon as tomorrow. For Tesla, just real quick, Tesla is still kind of stuck in this wedge. But if we get a break out of this wedge and a break above the 200 EMA, breaking above 188, it's going to fly to about 190 to 192.5. And once again, I also want to note that Tesla has this gap above. Really nice gap, like way up here in the 200s, very low 200s. Maybe Tesla's going to beat on earnings and, it just fills the gap. Who knows? Not saying that for sure. You should always be prepared for anything. But I'm just noting that as we approach earnings, we might see some more upside, possibly on Tuesday to Wednesday. Maybe it has to be one of those 2 days, most likely. And based off the close, I think Tesla's going to end up opening a little bit lower, trade a little sideways again, and then just try to push up even higher. And we are going to likely retest 188. If we get a clean break above it, not like a quick, break and then dump right after like we saw today. We want a clean break above it, a nice hold above 188. If it does that, that's going to be a bullish signal, and this thing is actually going to get to 190 pretty quickly to try to fill its gap around 192. Once again, the odds are favoring more upside very soon. It's getting tighter and tighter and tighter. And I do believe we could see a breakout, maybe like a small one, not too massive, but a slight breakout as we once again get very close to earnings on Wednesday. Now, for the dollar index, I believe that this thing is once again a big red flag for the markets. We're actually hitting extreme levels from different volatility indexes out there. The dollar is actually up 0.53%, showing more strength than before. If it keeps breaking out, that's going to be a bearish signal for the markets. So far, we're getting some bullish signals. We had a bullish divergence on, I think, the weekly on it, and it's starting to hold up nicely. If this thing keeps going and going and going, a breakup of the 50 EMA is going to become very bearish for the stock market. For now, it's holding up. If it keeps going, my point is the market's going to likely top soon. If this thing actually gets to the really big breakout, it's still at a pretty low value at 102. We're just going to have to wait and see how this goes. But like I said before, I believe there's a bull trap forming in the markets. There's no guarantee it's done yet, meaning the market could push up more. But once we get to May, I am anticipating downside for the markets, or maybe even close to May. Now, NIO did something that I did not expect and made me wrong about it. With the Chinese GDP data coming out and also some bullish news from Xpeng production and profitability mechanisms, we actually saw this head and shoulders that was forming right on NIO, and instead this thing just broke out. It did the opposite of what even I expected. I thought this thing would likely see some weakness, and instead it actually did something very ironic. It gapped up, and because of the data and some nice news, it just kept going. So now it has technically invalidated the head and shoulders for the most part. We're not actually seeing it playing out the way most of us were thinking. And sometimes unexpected things like this could happen. Sometimes the market tries to trick you. So what does this mean for NIO? It looks more bullish than bearish. If we're bearish, watch 9.7, 9.5. and then this gap fill to 9.28. If we're bullish, if we have to retest 10, break 10, 10.25, then 10.42 will come. I think the odds are favoring more upside for NEO. It's holding up very nicely so far, but we have to see it break 10 first. If it breaks 10, it's going to be a good sign. If it fails, then it is what it is. But so far, it's favoring the bulls a little bit more. Microsoft did what I expected. I told you all that Microsoft would likely uh, either pull back and then try to get a nice bounce. And I told you all there's a possible like head and shoulders that was developing. It still is technically valid, but if it keeps breaking out, that can also invalidate for the time being. Right now, we got a nice close, 288. We're likely going to retest 290 very soon. If we break 290, then we have to watch this 291.7 area. But until then, I do believe we're kind of in the middle, but the odds are favoring a retest of almost 292. And it could even try to break then and invalidate this head and shoulders. Once again, it is still a possibility. Tech has been slowing down a bit, but we are actually showing some strength. So we're still in the middle. But it is very important to be very, very cautious. Our triple Q is looking quite nice. Got a nice bounce very close to where this support was. It bounced off the 50 EMA on the 1 hour time frame, and it held support nicely. If it breaks below that, then there is a risk of it coming down to fill this gap around 313, but so far it did not do that. Instead, it bounced, and now it's getting closer to 320. It might try to retest this tomorrow depending on how earnings go. Because remember, tomorrow in the morning, we have Bank of America and Goldman Sachs reporting earnings. This is going to be very impactful. The technicals look more bullish though, so my best guess would be maybe Bank of America and Goldman Sachs do not do too bad. And the expectations were a little bit exaggerated because we are expecting bad earnings for banks, and so far they're doing okay. But I believe the bigger banks are going to be fine, but I'm not too sure about the regional banks, right? I'm not too sure about them. We'll have to see how that goes. Until then, we'll figure it out. But Amazon has a possible, you could argue there's a head and shoulders developing here. But once again, there's no true confirmation of this thing necessarily like tanking. I'm not seeing a divergence developing or anything like that. If it's bullish, it's going to retest 104. If it breaks that 105, will come. If we're bearish, I mean, the bearish case would be this head and shoulders playing out, like a left shoulder, a head, and a right shoulder, but it would have to get rejected very close to where it is right now. If you get a big rejection off Amazon, you have to watch not the 200, the 50 EMA at 101.38, break below that. And if this thing comes down to the 200, then it's going to fill this gap and come all the way down to the high 90s. So it's really just a make or break for Amazon. We're kind of in the middle, but seeing this trend, it is still in an uptrend. It's still holding up nicely. There's a chance Amazon might just trade sideways and maybe try to retest this top right here. There's a chance it might actually invalidate this head and shoulders and might just try to keep going for another drive up. Nvidia, lo and behold, this thing at 270 was not looking the strongest. It still is looking weaker than before, but this head and shoulders is still valid right now, right? We still have a valid head and shoulders. There's no confirmation that we're actually going to end up breaking out to like new highs yet. There's no confirmation yet. We'll have to wait and see how this goes. They do have earnings in quite a bit of time. It depends on how the market opens and how we perform. Because technicals are looking pretty nice, we might see Nvidia try to fight for this 270 area. The bearish case would be a 266 retest, and if that fails, then 264 could come. In my opinion, it looks to me like this thing might try to retest 270. If it breaks it, might try to go for this 274 area, but it's not going to be extremely strong. I think it's just going to be a small pump. And if it does actually break out that high, well, as long as it doesn't break the high from the right shoulder, it's going to be valid, this whole head and shoulders formation. As long as it does not break above like 277, it is still technically valid. And the overall trend, the bigger picture would still be more bearish for the next few months, as once again, this thing looks like it's topping. It's very overextended. But before this thing does start reversing, we may have a little more upside to go. Aapl did something very similar to what I was initially thinking last week. I was just a little more indecisive yesterday. Looking at the trend, we do have technically a nice structure here. We actually we temporarily had this bullish divergence right here. Aapl got a nice breakout. It held up quite nicely, just barely closing in the green, and it's likely going to chop around this 166 to 163.5 area, back and forth and back and forth. But there's a good chance it's going to fight for 166. If it breaks to 168, could come. If it breaks out to the upside like that, it's going to push SPY in the QQQ and the Nasdaq and S&P 500 and most of the market. Basically, it's very powerful, and so far it is actually favoring the bulls a little bit more based off this structure, based off the facts that we do technically have a bullish divergence here, as the RSI has been declining, the price has been on a slight uptrend, and overall, it looks like it's going to retest 166. If it breaks above that, now I don't know for sure if it's going to break it, but the odds do favor that happening. That could turn bullish. It's also going to be affected by the bank earnings coming out tomorrow, but once again, it looks more bullish than bearish. AMD is looking relatively weak, down at 2% for the day. Overall, if it gets a break above 90, there is a chance I might try to fill this gap and retest the 200 EMA, but then it's not really that big of a move, so I'm not really like too fixated on this stock. But overall, I mean, it could still make a small move to the upside. There is still some juice left in it. Google is pretty flat. I will say that we did actually gap down, and this could actually be a big opportunity because as long as this is not kind of like a flag that's forming, as long as it holds support, as long as it holds the 105 zone around this 105 area, it has the potential to try to push up and fill this gap. If we break above the hourly 200 EMA, and this whole area is kind of like a resistance, which is where we have a supply zone, that's why it's highlighted like this. If it breaks above the 50 EMA on the hourly, this 106.6 level, I'm going to be watching this 107.5. Break that, and this thing is going to fly to fill the gap, get closer to at least 109.3, but we have to break above 107.5 first. What do the odds favor? Well, seeing the fact that Google has a tendency of bouncing off 105 and also 104.11 around that area, the odds are favoring that as long as the market holds up, this thing might try to continue going. I also want to note that on the hourly time frame, Google has I think we have a bullish divergence. Let me just double check this. The RSI hit a low of 42.62 here. And then we actually reached about 39 to 38, but we actually made a higher low technically. So Google made a higher low, the RSI made a lower low. That's a divergence that formed, which tells me the odds are favoring more upside. We also have a possible bullish triangle structure developing. That tells me, once again, I am prepared for anything because of earnings, but the odds are favoring Google trying to push up a little bit more and trying to get back to fill this gap, or at least make an attempt to get to at least 107.5, if not higher. Netflix, I'm not too sure about this. It might try to pump approaching earnings, but it's going to depend on earnings, how this thing ends up performing. Earnings comes out on, I think it's Wednesday. It might be tomorrow. I'm sorry. I think it's tomorrow. Yeah, tomorrow after the market closes, Netflix has earnings. Not too sure exactly how that's going to go. I might try to retest the 50 EMA as we approach the day, try to get closer to 340 if it pumps with the market. And then we'll just have to wait and see how it does. Really, guys, I just don't know how they're going to do because of it. It might just hold up for the time being and try to push up just a little bit more, get closer to 340 until then. Then we'll just have to wait and see. We have another bearish development for the market going forward, meaning by next week or within the next few weeks, there's a chance we might see something not so great for the bulls because the 10-year treasury yields up 1.96%. This is bearish for the stock market. And as this thing continues to climb, we don't actually have any like reversal signals yet. We are at resistance, but overall it's holding up nicely. What this tells me is if this thing keeps going, the market's going to top and the market's going to struggle to break out. But if this thing slows down at this resistance around this 36 area, this could actually help the stock market. We're kind of in the middle with this. Like I said, if it keeps going, that's going to become bearish for the stock market. It's going to slow the market down. And what could be happening is maybe it's getting ready to break out, or it's just trading sideways, and then the market's going to get rug pulled soon. And this is what this is trying to tell me. That's the reason why I made a video yesterday and I called it the bull trap. What I'm thinking is SPY is going to reverse and come tanking down. But when is it going to happen? That I do not truly know. And so far, the technicals look a little more bullish. We're likely going to try to keep going. But I want to warn you all that we're likely in a topping process. I just don't know exactly where the top is going to be. Sometimes the market just wants to go and go and go. But as long as this bearish development is still here on the MACD and also the RSI, I'm still open to the possibility and the likelihood of there being a big reversal in the future. Who knows what's going to trigger it, whether it's CPI. CPI is coming out, I think, in like 3 weeks. Maybe it's going to be some other piece of data. Maybe it's going to be some kind of earnings. Maybe Apple doesn't do well during earnings. Who knows? Maybe it's going to be something very soon. Who knows? I just don't truly know yet. But for now, the charts look more bullish. The earnings coming out have been more in favor of the bulls. The market could push up a little more. It could keep going. But this is risky because once again, the 10-year is telling us that eventually there's going to be a reversal coming. The dollar is starting to break out. If it keeps going, that's also going to signify that. There's no confirmation of the trend breaking yet. There's no confirmation of a crash or a pullback. Market's holding up nicely. It will likely try to keep going, but always be open-minded. Do not be too greedy in this market, right? Retail are buying the dips. Retail are just buying and buying and buying. Their institutions are selling. They're selling right now. All right? Keep that in mind. Yes, we could see more upside, but don't forget that there is likely a topping process right now. The last thing I wanted to say is that I have a lot of merch for you guys if you are interested in buying anything. It's really your choice. It's completely optional, but I just have this available as something you could do to support the channel. If you're not interested, it's completely fine with me. If you want a hoodie or sticker that says "To the Moon" or some custom merch by me, all you have to do is look either above or below the comment section and you will find whatever you want. All right, guys. Well, thank you all so much for listening. I appreciate every single one of you. And do not forget, the Webull link right over here ends in just 8 hours. This is your last chance to get those 12 free stocks. Thank you all. The market to the moon, as the long term is still very, very bright. And peace out.